Hello, welcome to Wealth Creation Thursdays, a conversation on how to create wealth and live abundantly. I'm your host, Wangare, and our conversations are usually powered by the Making Sense book, which is a book on personal stories of people and their money journey that has been authored by Waceke Nduati, who's also the founder of Centonomy. On today's conversation, we're going to have on how to spot and avoid investment scams. So by a show of hand, how many here have been scammed of their hard-earned money? I know that that's a story many can be able to relate. So this is a sensitization on how do you spot investment scams and how do you avoid these investment scams. And I'm going to get right into it. The first thing that you need to know is Ponzi schemes and pyramid schemes. And what is a pyramid scheme? A pyramid scheme is a scheme that requires you to recruit other people and there is no underlying financial asset or a financial instrument. And these are the MLM, and we know them. You know, the multi-level marketing. So that is a pyramid scheme. So if at all somebody has introduced to you and they're telling you that you need to recruit somebody and then that person needs to again recruit somebody else, then that's a pyramid scheme. The second thing is a Ponzi scheme. And how do a Ponzi scheme work? It works by the returns are paid to earlier investors from money of new investors rather than from profits earned from investments. I'm gonna repeat that again. A Ponzi is returns are paid to earlier investors from money of new investors. So that's a Ponzi scheme. So if at all you want to avoid being duped, then you need to know what a pyramid scheme. So when you hear it's multi-level marketing, then there's a problem there. And also if it's a scheme where somebody else, you're getting returns from the earlier people who joined, then that's a scheme and you need to be very careful about, and you need to run. So that's the first thing. Also, the second thing is if it's too good to be true, if the returns are unrealistically good, then you need to be able to question that. Let's say, for example, that the average market return for something like a money market fund is 8 to 10%. If somebody is selling you a money market fund of returns of 16%, 20%, then that's a scam. And this means that they are either one, taking too much risks with your money without, they're taking too much risks with that money of yours. That's one thing. Or two, they are ultimately just lying to you. It means that they are not, putting this money into a money market fund. They are using this money for something else and you are actually being scammed. So if it's too good to be true, then that is very eyebrow raising and you need to run as quickly as you can. So that's how you can be able to spot a scam. The third way in which you can be able to spot and avoid a scam is get rich quickly schemes. When somebody tells you that your principal will be doubled in 2 weeks' time, then that's fishy. The best and the quickest way for you to actually grow your income and grow your investment portfolio is slowly, by taking advantage of the power of compounding interest. So even when you put in your money, even let's say if it's in that money market fund or wherever you're putting this money, it takes time. Like you need to leave that money untouched, for a couple of years before you can be able to liquidate or, remove that money from there or liquidate your investments. So if at all somebody is promising you that they will be able to double your principal, they'll be able to double your income, within a short period of time, then you really need to do your due diligence. So that's the third way in which you can be able to spot an investment scam. The fourth way is a lack of understanding of the underlying asset of investments. Let's say, for example, somebody is telling you that they're selling to you a money market fund or, rates. So the underlying asset of a money market fund is treasury bills, it's short-term corporate debt, it's bank deposits. So what this means is you need to, as an investor, you need to know about the 3 asset classes. And I'm going to let you know what these 3 types of asset classes is. The first asset class is cash and cash equivalents, and this is the money market funds. 2, we have equities as an asset class, and it means that in equities, what you're primarily investing in is shares. And the third asset class is fixed income assets, and the underlying asset here is the government bonds and the corporate bonds. So there are 3 kinds of asset classes, and these are the things that they are the underlying asset. So that's something that needs to be very clear to you. So if it's a rate, if at all you're taking up real estate investment trust, what that means is that the underlying asset needs to be real estate. So if somebody is telling you about another underlying asset as far as rate is concerned, run, because that is a scam. The 5th way for you to be able to spot an investment scam is pressure tactics and high sales tactics. High pressure tactics and sales tactics. So scammers may pressure you to act quickly, claiming that it is a limited life opportunity that you will miss out if at all you do not invest immediately. Because what this means is that they do not want you to do your due diligence. They do not want you to do research and figure out whether this is actually something worth investing in. So if somebody is telling you this is a one-time offer, somebody is telling you that it's limited, it's take it now, then that is a scam. That is a Murife, run. And the other thing that you also need to know is before you invest, you must ensure that you have, 1, done your due diligence, and 2, you must ensure that they are regulated by the relevant body. For example, investments in Kenya, they are regulated by the Capital Markets Authority, which is shortened to CMA. So all investments, even the organization that you're looking to invest with, you must check that they are actually regulated by the regulatory body, which is the Capital Markets Authority. Let's say, for example, you are part of a SACCO and you are looking to get into this SACCO so that maybe you can be able to borrow 3 times what you put in the near future, or you want to get dividends, from your contribution in this SACCO. All SACCOs they have a regulatory body, and it's called the SACCO Societies Regulatory Authority, SSRA. So if at all the SACCO that you want to put your money in is not regulated by the SACCO Societies Regulatory Authority, then that is not a SACCO that you need to be putting your money in. If at all you're looking to buy insurance, all insurance, they are regulated by the Insurance Regulatory Authority, also called the IRA. So if at all your insurance firm is not regulated by the governing body, then run away. So that is a way for you to be able to know what is a scam and what is legit. And to just quickly talk about the things that we've discussed is to be able to spot a scam. 1, you need to ensure, is this a proper investment, or is this a Ponzi scheme, or is this a pyramid scheme? 2, is it too good to be true? Are you getting unrealistically high returns from the market rate? If you are, then that could be a scam. 3, if it is a get rich quick scheme, if they tell you that they will double your principal amount in record time, then that's a scam. If at all you do not, you as an individual, understand the underlying asset class, because it will make you be able to decipher whether this person is lying to you. If somebody is selling you a rate, which is real estate investment trust, and somebody is telling you that this rate, they're also putting it in government bonds, then doesn't make sense, because rates is only money is only invested in the real estate industry. If it's a money market fund, then it's the money is invested in treasury bills, in short-term corporate debt and bank deposits. And we've also talked about, as an investor, you need to know about these three asset classes. You need to know about cash and cash equivalents, and an example is money market fund. You need to know about equities, which the underlying asset is shares, and you need to learn about fixed income asset, which the underlying asset is the government bonds and corporate bonds. And last but not least is, if it is not regulated by the regulatory body, then you know that it is a scam. If it's high pressure tactics, they're telling you the now, you know, things are not okay. So those are some of the pointers that I wanted to share with you today as far as how to spot a scam investment. And if these are some of the things that has come to your radar, then run away. Our conversations are usually powered by the Making Sense book, which has been authored by Waceke and Nduati, who is the founder of Centonomy. So if at all you're looking to learn about real life personal stories of people and their money journey, then this is the book for you. It only retains at 1,000 shillings. You can buy directly from us from the number down below, or alternatively, you can get this book from our bookshop partners. You can get this book from Textbook Center, from Nuria, from Prestige, from Kibanga Books, from Bookstopia Center. You can get it at Amazon as a Kindle version or a paperback version, or you can get it at Restock Booklex Uganda. So 2025 is the year for you to actually get smart when your money matters is concerned. And before you hop off, ensure that you have liked this video, that you have shared this video with your loved one, that you have subscribed. It really helps to grow this channel. And most importantly, tell us of your scammed story. Tell us what gimmicks that they played on you, or you can also just share about a story that you've heard of. You know, it could be of a friend. That would also help just to sensitize us, so that you can be able to know what are some of these red flags. So thank you for being here. Till next time, kwaheri.